you paying at the pump, and how to turn around a negative time in the real estate market into a positive for you. Make sure you send us your email questions. That address, issue1@cnn.com. We'd love to hear from you.
A new report from RealtyTrack says foreclosures spiked 57% in March compared to the year before. They were up 5.6% in just 1 month, from February to March. So RealtyTrack tells CNN that bank repossessions also spiked in March, up 129% from the year before. Now, they estimate the banks will hold 1 million properties by the end of the year. We'll have another spike in foreclosures in the third quarter of this year after a wave of loan resets in May and June.
All right, so it sounds like all bad news, right? We might be in a housing slump, but you can capitalize on this down market. Dani Babb is the author of How to Find Foreclosures. Dani, the thing I love about the information you're bringing to us today, this first list of places to shop for a foreclosure. These are all places that you'd like to live.
There are places that you'd like to live. There are also places that boomers will be moving as they retire in the next couple of years, which makes for a great investment, absolutely.
Yeah, let's go through this list. We've got Palm Beach, Florida. We've got Vegas. Now, here's my question about Vegas, though. Will that city continue to grow like it has?
Well, we've seen 10% plus job increases year over year for the last 4 years, while the rest of the country has seen some slowdowns in certain areas. So I don't have any reason to believe it's not going to continue to grow.
All right, I love that list. That's a great list. All right, let's talk about what you need to know when you're trying to figure out which market to go into, and where do you get this information anyway?
Well, I get it from RealtyTrack myself, because they have a great comprehensive database.
We're familiar with them.
Yeah, but some of the other things that you need to know, you want to find out what the job market is like in the area that you're moving. You also want to find out what the long-term projection is for that for the particular community. You can do that by finding out, is a Lowe's moving in there? Is a Walmart moving in there? See what giant retailers are moving in, and also what big companies are moving into that.
That can be tough, though. I guess you have to subscribe maybe to the local newspaper and see what's being reported there.
That's an excellent way to do it. Also, you can go online. A lot of these individuals, especially realtors, they have blogs about the community and things that are happening there. Subscribe to those blogs. Use the RSS feed option and get them to subscribe to your email and find out what's going on there.
Now, you say don't invest on the street where there are tons of foreclosures.
Yeah, I'm not a big fan of that, because what happens is the price, as these people make offers on these foreclosures and the banks begin to accept the lower offers, we start to see the bottom continue to drop. So that's a really big problem.
Now, it's not just high foreclosure areas that offer opportunities right now. You also have a list of great places to invest outside of the foreclosure areas.
Yeah, I do. You know, I love the areas outside of Boise. They have seen incredible growth. They have lots of new construction, but they're still growing and people are still buying. I love Oregon and Washington, because boomers, if you look at the top 5 states where boomers currently live, where they're moving as they retire, nothing changes with the exception of Washington and Oregon.
You know, the West is on fire. It's really interesting to see the bigger trends. Folks retiring out there, moving out there. And I have to ask you about this new trend, house swapping. I don't know about this. I would trust my deal online to find somebody out there that wants to swap houses. Does it work?
It does work. We've had about 20,000 people successfully do it so far. And there's several ways to do it. You can either use a site like Craigslist, which I would not recommend. It's kind of insecure and unsafe. Or there's 9 sites out there. The biggest one that I know is onlinehouse-trading.com. And what they'll let you do is they use a legitimate escrow company. You do a full appraisal, a walkthrough, you get an inspection, all the things you would do to safeguard your property if you were buying it happens online, and you can trade houses with someone, whether you're trading the mortgage or just the potential to buy in the future.
Is it mostly investors doing this, or are regular people who are just underwater with their mortgage doing it too?
It's mostly people who just need to move very quickly, either for military requirements or job relocation, need to get out of their home really fast but can't sell.
Dani Babb, great information. You'll be back later for our help desk. We'll see you in a few.
Sounds good. Thanks.
Jerry, did she just recommend buying houses in Boise, Idaho? I think we might have
the West is on fire,
I think we might have just been punked. But that's why you got to stay with issue number 1.
Hey, get ready, get set. The help desk is open for business. Let's get right to your email questions. To help us today, Dani Babb is the author of Finding Foreclosures. Doug Flynn is from Flynn Zito Capital Management. And we're joined by the very lovely CNN business correspondent, Stephanie Elam. Welcome to you all. Let's get right to the first email. This one's from Virginia. We currently have our house on the market for what we owe on our first and second mortgage. We realize with the cost of living skyrocketing, we won't be able to continue to afford our mortgage. However, we can't compete with foreclosures for sale in our neighborhood. We don't know what to do next. Dani, a lot of people are in this situation. What do you recommend?
Don't do anything. If you can possibly hold this home right out the market. If you can't afford the payment, try to refinance if you can.
Great idea. Okay, how long should I be willing to wait, though? I mean, you say write it out. Some folks, they need to get moving, what do they do?
It could be years in some areas. I would consider refinancing to an adjustable rate mortgage that will drop their rate considerably.
Oh, that's a great idea. Okay, let's go to the next email. Miguel asks, do you know of any good green mutual funds? Stephanie, that sounds like it's right up your alley.
Well, Miguel, there are some, and there's a lot of information out there. You can do a little bit of researching. It's called socially responsible investing, and there's one company or organization, I should say, it's Social Investment Forum, socialinvest.org. They can go through. They have mutual funds on there that are all about being green, and you can take a look at how they perform and see which one works best for you.
You know, Doug, I'm wondering, though, if you were investing in green funds over the last couple of years, you would have missed the whole move in oil companies.
That's true.
How do you what do you do about that?
Well, it has to be one part of your portfolio for most people, unless you have a mandate where that's the most important thing to you, and you're willing to sacrifice some performance for the goals of being socially responsible.
Okay, well, you got to balance those things out, I guess. Rich in Arizona asks, so much attention has been placed on helping homeowners on the brink of foreclosure. What relief is being offered to families who refinance to use the equity in their home to satisfy outstanding debts? Their decision to be accountable and not rely on a bailout still leaves them with a double-digit interest rate and poor credit score. A lot of people are in this situation where, you know, they wanted to use the home equity line of credit to, you know, fix the kitchen, all the things that they were told would be good for their home's value. What do they do, Dani?
Or even pay off debts like high interest debts like credit cards. Rich, right. You're absolutely right. A lot of people are in this position, and the best thing that you can do right now is not count on any sort of bailout. It doesn't look like that's going to happen, but try to get that HELOC rate down. You know, you should be able to get that to 7 or 8%, even with a FICO of 660. So I would hang in there
and get a new HELOC,
get a new loan.
Absolutely. Okay, great idea. Bob asks, when the U.S. was on the gold standard to put more dollars into the economy, the government needed to produce more gold or buy more gold or get more gold. Now that we are not on the gold standard, how does the government put more dollars into the economy? Does it just print money, Stephanie?
I like this question, but it is funny because we do what all Americans do when we need money. We borrow it. And so we do in the form of treasury bonds, you have notes, treasury bills. All of that is the way that the government goes about getting more money when they need it.
Yeah. Okay. So more debt for Americans, obviously.
Exactly. Our children will be paying for it.
Yeah, they will.
Yeah.
Absolutely. Okay, Terry in Virginia asks, in the long run, I can see where a president's policies or lack of fiscal restraint can affect the economy, but regarding the mess the next president is going to inherit, just how much control does a president have towards a quick, short-term recovery? This is sort of a political question, sort of an economics 101. Doug, what do you think?
I don't think they can really do a lot for a short-term fix. I think that long-term, their policies are what give you the movement in terms of whether you have low tax policies or low interest rates. You can keep them low if inflation isn't a problem. But that's the issue. Is longer term, I think they can do some things. A short-term fix, I don't know how much control they actually have.
Yeah, the economy's bigger than the president, you know?
Exactly.
All right, so Patricia asks, I have a 15-year fixed mortgage and was unable to pay for April. I called the lender and said that it will be paid by the end of April. The lender said it's unacceptable and I have to pay by the 15th or else. Dani, what can this person do?
You know, I'm actually surprised because more lenders are being aggressive up front when you first call them. Right. You must have a lender, Patricia, that's not so friendly. I would definitely, the day that you were late, if you really are going to be late on that payment, the day that you're late, you need to call them. They'll know that you're very serious then. And also, even though the rates are about 3/4 of a point higher, if you really can't afford this loan, you might want to consider a 30-year fixed and pay payments twice per month, which will actually pay it off in about 19 years.
That's a great idea. Those 30-year fixed rates are so attractive right now, and I think a lot of people forgive that. But you have to push these lenders to the brink before they really start working with you. Okay. Yeah. I think it's Tia in Indiana has a question. When you pay off an installment loan, she's got car payments, how long does it take to show up as closed on your credit history? Who wants to take this one?
I'll take it.
Doug, go.
It's supposed to take just a couple of months, but I've seen closed debts that are still open on your credit report for years and years. So one of the things you should do is run your credit report annually and take a look and see that if you have paid anything off, get that officially closed. Write to the lender, call them, because that will show up and affect your credit score if it looks like that loan is still outstanding or still open for credit.
You know, so many wrong pieces of information on these credit reports out there. I know it's really concerning to folks. We're going to do a 101 on that. Bianca asks, my husband and I will be purchasing a home in the next 2 months. We will be able to pay for, cash for the purchase. Is this a good move? Steph.
You know, I think that it depends because really it's about your rate of return. You got to look at your house as an investment. So if you're going to put your money into your house, let's say your rate of return is 5%, but you could actually make a 7% if you were to invest it in another investment vehicle. That would be a better way to go. You'll have more money in the long run.
I love
Take a
that
little
idea.
piece of it.
And don't discount the tax advantages for having a home equity loan or a mortgage, and the fact that you can keep that money invested. If you have the money invested, you have the equal amount of the mortgage. You actually have the house paid off. It's just a matter of actually paying it off with the money. So keeping the money invested, as she said, if you're doing a better return there, then that's probably the wiser thing long term. That's what the rich people do.
That's what the rich people do. That's what we're looking
we need
for.
to take those notes.
All right, okay. Thanks so much, you guys. Great answers. Danny, Doug, Stephanie, thanks for being with us today. Great stuff.